Like most people, I was taught this way as well. Go to school, get good grades, go to college, and get a job. And when you do those things, it benefits those three pillars. So when you go to college, they slap on some student loan debt. That's cash flow for the banking system. And then what do they tell you? They say, go get a high-paying job. Well, when you have a high-paying W-2 job, you pay the highest taxes, and that's cash flow for the government. And then they tell you, play it safe, diversify, invest in your 401k, and that's cash flow for Wall Street in the form of fees. And then they tell you, go buy a single-family home, start a family, and then now they lock you in a 30-year mortgage, and that's cash flow for the central banking system. All right, guys, welcome to another episode of The Report, another Saturday edition. And with that, I got my co-host, Alex Johnson. Welcome, Alex.
Thank you. How's it going?
It's going really good. We've had a busy last week. We had a couple meetups last week. I feel like the summer has finally come to an end, and now we're kind of in the fall season, and the sun is setting a different way. The weather's cooling off a little bit, but we got the holidays right around the corner. And excited for it. And we also have our latest hotel project, getting ready to be done with that renovation. And we're getting down to the final punch list items and gearing up for our grand opening, hoping for last week of October. So we'll see, but excited. How's everything on your end?
It's good. I'm looking forward to everything we have coming in the fall. I love fall time. So even you can tell with the weather, it's getting a little bit crisper outside. I just love all the things fall. So I know it's kind of basic, but it's true.
Yeah, totally. We're going to have to host another holiday party.
Yeah.
So excited to kind of see where that goes. I'm thinking either here at the office again, like last year, or maybe we do it at our new meetup venue.
Yeah, we'll see. We'll see.
Cool. Well, we got some good questions this week. So excited to dive into it. So why don't you go ahead with the first one?
All right. And thanks again for everyone that sent in their questions. We had some really good ones again, so keep them coming. All right. The first one we have today comes from Jared. Why do you think the school system doesn't teach real estate investing and business?
Yeah, it's a good question. So in my opinion, it's somewhat of a system, quote unquote. You got three things. You got Wall Street, you got the central banking system, and you got the federal government. So, like most people, I was taught this way as well. Go to school, get good grades, go to college, and get a job. And when you do those things, it benefits those three pillars. So when you go to college, they slap on some student loan debt. That's cash flow for the banking system. And then what do they tell you? They say, go get a high-paying job. Well, when you have a high-paying W-2 job, you pay the highest taxes, and that's cash flow for the government. And then they tell you, play it safe, diversify, invest in your 401k, and that's cash flow for Wall Street in the form of fees. And then they tell you, go buy a single-family home, start a family, and then now they lock you in a 30-year mortgage, and that's cash flow for the central banking system. So in my opinion, I believe that they don't teach real estate investing and entrepreneurship because they want to, benefit these three different pillars. And so I believe it is intentional that they want to breed middle-class people, myself included. I had no idea real estate investing was even an option in entrepreneurship until my young 30s.
Yeah, I think it's just... it's kind of calculated to kind of keep everyone in their system, how they see fit, how it benefits them. So it's definitely interesting.
Yeah, no, absolutely. So I don't know. I didn't realize this growing up. I didn't know this was an option. And as I grow, I'm like, okay, I kind of see it more and more. To me, it's more and more apparent.
Yeah, definitely. All right. That was a great one. Thanks, Jared. Next question comes from Matthew. Is it better to go into a high cash flow or high growth market in today's market cycle?
This is a great question. So I think, early on when I first got into real estate investing, I was all about the cash flow. I didn't care too much about the appreciation. I just wanted some passive income. And so I was going into markets in the Midwest. However, in today's climate, with where we are in the market cycle, it's important. I need two things to buy right now. One, I need to be able to buy at a discount. And two, I need to be able to add tremendous value to whatever it is I purchase, because we are in a softening climate. And the Fed has all the control with the interest rates right now. I don't think this rate environment is going to last forever. But I wouldn't be surprised if it lasts another 6 to 12 months. And so that said, a lot of these markets are going to continue to soften before they improve. And so for me, I want to pick up something at a discount and pick up something to where I can add a lot of value, because it's going to give me a cushion and a margin for error should the market continue to soften before it improves. But I would say my perspective has changed in regards to this question. Should you buy for cash flow or should you buy in a high growth market? I think ideally you buy for both, you know? So one thing that I like to do now is go into a high growth market, buy in a good location, try to find something at a discount, renovate, add a lot of value, refi, and then cash flow it. And even if let's say I refi and I'm able to add enough value to where I pull all my money out of the deal, even if I'm breaking even at that point and I'm not making a lot of cash flow, I'm okay with that because over time with inflation, over time with rent growth, that break even is going to turn into a nice cash flowing property over time because generally speaking, your expenses aren't going to go up as much as your income. And then lastly, if a deal pencils right now with the higher interest rates, you can refi a year from now, 2 years from now into a lower rate. And now you get a nice cash flowing asset in a high growth market. And over the course of 10 years, 15 years, 20 years, that high growth market is going to appreciate 5 times, 10 times as much as that cash flow market in the Midwest, let's say.
True. There you go. I like that. Thanks, Matthew. All right. Next question comes from Ryan T. What are the biggest challenges as an Airbnb investor looking to buy their first hotel?
I think if you have experience operating 3, 4, 5 Airbnbs, even 2 Airbnbs, you have the fundamentals that it takes to go take down a boutique hotel. You understand the guest communication, the housekeeping, the fundamentals of marketing, pricing strategy, and the hospitality side of the business. But the biggest challenge is going to be, the boutique hotel is a much larger asset. So unless you have deep pockets, you're probably going to have to go out and raise money or a joint venture with some partners. And so you're going to have to learn the commercial side of these boutique hotels. You go buy a traditional Airbnb, you go pull out a residential mortgage, it's a residential property. It's very easy to wrap your mind around. But with a boutique hotel, you're buying a commercial property. And so it's a whole different lending environment. The criteria to get a commercial loan, they don't give commercial loans. It's very challenging to get a commercial loan if you don't have the experience. And the net worth. You're going to need a net worth equal to or greater than the loan amount. And if you don't have that, it's okay. There's different ways to leverage it. You can partner. You can bring in a loan guarantor that has it, give them a slice of equity. You can plug into groups like our Boutique Hotel Mastermind, where there's folks in there that will sign on the loans. So there's different ways to get around that. The next challenge really is going to be finding the right deal, right? How do you find the right deal? You're going to have to build out relationships with these brokers. And then, it's going to be a bigger thing. So, wrapping your head around all that sort of stuff, renovating the property, raising the capital, putting together these deals, and then keeping your nose out of trouble, having the right SEC attorney, and all that sort of stuff. There's a lot of other stuff baked in, but I would say the biggest challenge is going to be just kind of getting used to getting in the commercial sides, underwriting these deals, and then also sourcing the capital and getting these things deaded up. Yeah,
definitely. And I think we're kind of learning a lot of that right now too. But I do think, like you've kind of mentioned before, it is the next natural progression. And so if you can get in now, or if you can learn as much as you can about it now, we definitely see that's where it's going. So I appreciate that question. Okay, next question comes from Jessica. Do you think the Airbnb space is oversaturated?
If you are a busy professional and don't have time to invest in real estate but still want to participate in the passive income and tax benefits, my team, Summers Capital, is buying a lot of boutique hotels right now. We source the deals, we renovate the properties, and we even do all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, go to summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show. I think a lot of markets are becoming oversaturated, especially the ones without short-term rental regulations. And I would say that doesn't mean you can't do well in those markets. You just have to bring a unique property and a unique product to the marketplace. And I think the markets that are actually better performing are the ones that have a higher barrier to entry. They have stricter regulations. You just saw what happened with New York. New York, basically, like New York City just banned short-term rentals. And it's going to bode well for boutique hotels. I think a lot of these markets are going to continue to start regulating as time goes on. And I get it, from a neighborhood perspective. If I owned a property and I was raising my family, I wouldn't necessarily want a bunch of Airbnbs on my cul-de-sac with a bunch of transient guests and parties and that sort of thing. So I understand why the regulations are happening. It also takes away supply from the market. So it makes affordability, it makes properties less affordable for the everyday people that want to just buy a primary residence. But it also drives up rent prices. And so I think for those reasons, I understand why the regulations are happening. So yes, Jessica, the Airbnb markets, a lot of them are becoming oversaturated. Doesn't mean you can't do good. You can go into more suburban areas, which Michael Elefante, our guest this past week, mentioned he does good with, or go into a saturated market, but bring a unique product to the marketplace. I know our property out in Scottsdale crushes because it's very unique. And I know folks that are in Kissimmee, Florida, where there's 40,000 short-term rental listings, and they crush because they have a unique property. So I think those are two ways to get around it, or get into the boutique hotel space. So I think those are the two options.
Yeah, I mean, not all regulation is bad, so just have to learn how to pivot, I guess. All right, thanks, Jessica. Next question comes from TJ. What is the best way to source off-market deals?
I'm gonna answer this question with the approach and mindset of hey, we're taking down commercial deals because that's kind of what we're doing, right? And I would say it's important to remember 98% or more of all commercial assets, whether it's multifamily, office, retail, boutique hotels, those are all traded through a broker, whether it's on market or a pocket listing off market through a broker. And because those brokers have spent decades building relationships with these sellers. And so when the seller's finally ready to sell, those brokers are going to have access to those deals. And so for what I've found, what works best is to, instead of trying to find all these off-market deals in the commercial space, and yes, they will fall in your lap every now and then by building relationships, but I think the best source to buy these commercial deals is to build out really good relationships with all these brokers. And so get very clear on your search criteria, exactly what it is you're looking for. Like for us, we're looking for 10 to 40 units, boutique hotels, tired, 2 to 10 million in purchase price in great locations. And we love seller financing opportunities. When you get very clear on your search criteria, you can go to these brokers and figure out which markets you want to be in. And you can find which brokers have the most transactions in their given markets and start with those, call them, build out the relationship, put them on your list. And before you know it, you'll have 250 brokers on your list. You ping them, once every couple of weeks. Hey, Alex, happy Monday. Hope your weekend was great. Just checking in. Want to see if you have any deals in your pipeline that you're working on that might fit our criteria. As a reminder, this is what we're looking for. Happy Monday. Thank you so much. And when you have 250 on your list, you're going to get a lot of deal flow. Yep. And it all comes down to timing. If you can find the right broker that has the deal flow and you can be on their short list, because you got to think, how does a broker get paid? A broker gets paid when a deal gets to the finish line, right? And so they want to know, are you real? Can you close, right? Because if they spent 10 years building the relationship with the seller and then they recommend you as the buyer, but you can't perform, you can't raise the money, you can't get the lending, well, now they risk potentially losing that deal in that relationship with that seller. So they want to know, are you real? Can you perform? So you want to demonstrate those things to the broker. Yep. And when they have a good off-market opportunity, guess what? They're going to bring it to their short list of buyers, and you want to be one of those individuals. And next thing you know, you're getting first crack at an off-market deal. Yeah,
those are all good points. I think it's one of those things, like with anything, it comes down to the relationships and just building those out, and the follow-up too.
The follow-up's everything.
Yep.
With everything in life. And it's not just real estate investing.
Yep. So all good points. Thanks, TJ. All right. And then lastly, our next question comes from the Wellness Realtor. What is the key to starting a successful podcast?
It's a good question. So I had, for the folks that don't know, I had a podcast for 3 years, an old podcast that's still going with my old partners. And it's called now it's called the Real Estate Takeoff. When I was with them, it was called the Multifamily Takeoff. And I did it for 3 years, and I took everything I liked and didn't like about that podcast, and then I made it into this one. One mistake that I thought that we had made back then is it was the multifamily takeoff, so it was all about apartment investing. So every single episode was all apartment investing, which is cool. That's what we're into, but it's very niche down. So one, it's going to be hard to really grow the listener base if you're just talking about apartments because you're only reaching a specific person. But number two, I got tired of talking apartments for 100 episodes. After 100 episodes, I was like bored.
Yeah.
It's the same conversation every time. Like, how many apartment stories can you hear?
How can you spin it to make it different?
Yeah. And so I'm like, if I'm getting bored, the listeners are probably getting bored too, right? And so, they realize that, and I think that's why they're kind of more broad now. So I would say, be a little bit more broad, and then with your topics. So like with this podcast, I bring on anyone that has an inspiring story, whether it's business, real estate, or they're killing it in whatever their prospective field is. Like I want to learn about it, right? And then secondly, I would say figure out how many times a week that you want to put out an episode. So with the old one we did once a week. I would say at a bare minimum, do once a week and stick to it. Same day, same time. It builds trust. Even with folks that are not listening to your podcast, if they see you putting out a podcast every single Monday morning at 5:00 in the morning, they're going to see that, and it's going to build trust, and they can turn into clients or investors over time, even though they don't listen. And then maybe you want to step it up. Like with this podcast, we started off doing 2 a week. Now we're doing 3 a week.
We started out doing 1.
Did we?
Yes.
Well, initially, but pretty much right off the bat, we went off too. Yeah. But we had the right systems and processes in place now to where we can do 3 a week, and we can handle it. And so it's like every Tuesday, every Thursday, every Saturday. But you need the right systems and processes in place. Otherwise, you're not going to do it.
Yep.
And so start with 1, see how you do it, and stay consistent. And then I would say lastly, you want to you need to figure out, are you going to bring on guests? Are you going to talk solo? Are you going to do a little bit of both? For me personally, I don't like the solo stuff. Like I don't like having a conversation with myself. So I prefer bringing on guests. Like it's more engaging. It's more conversational. That's how I learn. And even, I'll do some solo stuff here and there, but like right now we're having a conversation, and that's, for me, that's way more exciting than just like talking to myself. So I would say figure that out. And then lastly, you need to figure out, okay, are you going to do it virtually or in person? My old podcast was virtually. It's great. This one's in person. I will say the virtual podcast is very hard to build a relationship. Yep. Right? Like I had Grant Cardone on the old podcast. He never knew who the hell I was. Yep. Now he's been on this podcast in person. We sit down before we record, we chat it up, we network, build a relationship. And guess what? Like now Grant's giving me his cell phone number. Like he knows who I am, follows me on Instagram. Like, you're building more of a meaningful relationship with all of your guests when you're doing the in-person stuff, and you never know where those opportunities are going to lead to. And I also feel like it's easier to bring on bigger name guests when you have an in-person setup. Yeah. It's not required. I wouldn't overthink it. Really, like if you plan on starting a podcast, I would say do it. It's one of the biggest levers that you could do right now. I feel like it's kind of the cheat code for real estate investors, entrepreneurs, anyone that's doing anything that involves marketing, growing their brand. I think having a podcast is huge, and then you can chop up the highlights, and there's your short form content for social media. So good question, but I would say if you are thinking of starting a podcast, I think podcasting is still relatively young, and I think it's still got a long ways to go. I think this is just the beginning. Yeah, definitely. I think those are good points. I think you nailed it. I think the consistency is key. Because, you build that trust, and then just building those connections. How many people do we get that email us or call us that like already know you and know your story? So it just makes connecting with them that much easier. So I think that consistency is key, and just building that rapport with the listeners. 100%. And I will say that it brings opportunities that you don't even think is possible while growing a podcast. So I think it's, looking back, it's like, and that's why recently I told you, like, hey, we sat down with you and Parker, and I said, hey, we're gonna go from 2 to 3 episodes. And yes, it's gonna be a little bit more workload, but it's gonna pay dividends in the long run. Yep. Anyways, that is it to conclude our Saturday edition podcast. Appreciate all the listeners reaching out with their questions. And Alex, as always, appreciate you. Yeah, thanks for having me. Thanks for the questions, guys. Keep them coming. We love hearing from you. Listeners, thanks for tuning in. We'll see you in the next one. Peace.